A very good evening and a warm welcome to Personal Finance. I'm Gugulethu Cele. Today I'm joined by Debt Busters Debt Management Company Chief Executive Ian Wason to tell us more about the Summit mystery shopper investigation into credit life charges. So good to have you with us this evening, Ian. Credit life and the mystery shopper investigation. Maybe before we get into the particular terms and conditions, walk us through this particular mystery shopper investigation that your company took part in.
So we obviously are the largest debt counselor in South Africa. So we sign up over 1,000 clients a month, and each client has about 9 credit agreements. So that's about 9,000 credit agreements we look at every month. So obviously we see at the sort of coalface the cost of credit life that some of these consumers are being charged, and quite frankly, it is being missold in some occasions, but it's grossly overpriced.
Maybe let's get a quick recap here, because obviously credit life is one of those products that is issued to consumers in an attempt to protect them just in case they are unable to make up the payments that they have on their debt. Is this understanding correct? And if so, walk us through the concept further.
So first of all, credit life is a fantastic insurance policy to have. It basically protects you from your debt repayments if you were, for example, retrenched, or, for example, if you died or suffered a disability which prevented you from working. It would mean that your credit providers were repaid their debt, and those credit providers then couldn't come after you, or in the case if you had died, after your estate. So it is a fantastic product that really protects consumers. However, it is a product that should be sold at a fraction of the price. And when I say fraction, probably 1/10 of the price that it's currently being sold at by some unscrupulous credit providers.
Walk us through the concept further, because you mentioned it's a fantastic product, should be sold cheaper. Does this mean that consumers actually aren't aware of what they're purchasing when they take on credit life insurance? Credit
life insurance is normally tagged on to a purchase for goods, say at a furniture retailer, in terms of they bundle it with the loan and the credit that they're given to buy those goods. It's also added on to personal loans, is really where it's most prevalent. So if you want to go and borrow 10,000 Rand, you will have to take out a credit life insurance policy with the majority of credit providers you take out that loan from. It is a condition that you do that, and that has to be signed up to immediately before you get the money for the loan. There are some well-known credit providers who do not charge credit life. For example, Capitec is probably the biggest example, but the vast majority of other credit providers do put it in place. Now, credit providers do technically allow you to substitute their credit life insurance policy at the inception of the loan. But there's obviously been increasing regulatory scrutiny on this, because some credit providers, for example, Stangen Insurance Company, which is part of Able and does the credit life insurance for African Bank, tries to prevent consumers, or make it as difficult as possible for consumers to swap out that credit life later in the loan repayment period, and hence prevents their clients from getting cheaper cover from competitors.
What legal recourse then do consumers have in that particular case?
I suppose they can take it to the regulator, the ombud, but really there's been very, very little examples of where they've got recourse from here. However, if you look at what happened in the UK, the regulators stepped in after considerable media pressure and pressure from consumer advocates to ensure that credit providers repaid all the premiums back to consumers who were missold this credit life insurance. They called it PPI in the UK, or to consumers who are charged an excessive premium on that insurance. And that total bill for the credit providers in the UK is £30 billion that they've either had to pay back or provide for. So it's been a huge, huge scandal in the UK, and really the NCR, the National Credit Regulators, step of taking Lewis stores to the National Consumer Tribunal for mis-selling credit life has been really the first step towards this, and hopefully towards the consumers being able to recoup some of that excessive cost over the last few years.
The 13 billion you quoted from the UK is quite a hefty number. It actually puts it into scary perspective as to what that figure could look like in South Africa. Are we just as bad as what we saw with our UK counterparts, or could things potentially be worse?
I think they could be relatively worse in terms of it could be a higher number relative to the amount of debt that's been lent. And it was £30 billion, 30, in the UK. So I don't know what that is. Times that by 20 and you get the answer in rand. It's obviously going to be a far smaller amount in South Africa, but relative to the loans it's going to be huge. So somebody like Stangen Insurance Company, who's insured a huge amount of loans for African Bank were lending up to 2 billion rand or so per month. Every single one of those loan agreements had credit life insurance, and every single one of those agreements was charged, if they're charged, the average amount that Stangen charges around 10 rand per thousand. Now, I think an appropriate price for credit life of those type of policies is probably around 2 rand per thousand. So you can see the excessive cost and the unreasonable amounts that consumers have been charged on that.
Let's take this back to the consumer then, Ian. For someone who might go out and take out a loan in future and have credit life insurance attached to this particular deal, can they negotiate a lower price, or can they shop around for a cheap alternative?
They can't really negotiate for a cheaper price on the credit life insurance because it's normally a standard policy, but they can tell the loan provider, okay, I'm going to go out and get another quote from another provider. But typically there aren't really any providers out there who can immediately step in and give them a quote to replace that insurance. So the regulator is going to be stepping in. In the amendments to the National Credit Act, they put in their ability to introduce a cap on the cost of credit life insurance. That cap is rumoured to be around £3.50. Unfortunately, it falls between the DTI and the Treasury to decide what that cap is and when it comes in place. And the DTI seem to have done their job, and we are waiting on Treasury, as we have been for several months now, to approve that cap and get it in place. So that's the first thing. The second thing is that they are going to be quite adamant that consumers are allowed to replace credit life insurance at any point of the loan cycle, which will of course dramatically reduce the expense to the consumer and should reprice the credit provider's books of debt almost immediately as the market forces take that into account.
It sounds very concerning because there's still a lot of regulations that need to be put in place before those who are in this situation actually find some kind of reprieve. But you mentioned that you deal with a lot of indebted South Africans. If we do see this cap being implemented on credit life insurance, will it alleviate the pressure on these overly indebted South Africans?
Anything that makes a small difference is going to be appreciated for the South African consumer. There are 13 million South African consumers in arrears on their debt. The vast majority of those have got unsecured debt, which is where this credit life is being sold, and so it'll have an impact positively for all of them, and is definitely something the government needs to do. They've introduced, or they've proposed, a reduction in the interest rates on unsecured debt. They currently have a cap or a maximum charge which is just over 32%. And they're proposing that maximum is reduced to just under 25%. Hopefully we'll be seeing those caps come in soon, and that's going to reduce the cost to consumers for borrowing unsecured debt. But obviously it's no good just introducing a cap on the interest rates if they don't introduce a cap on credit life insurance, because it's just like squeezing a bubble or a balloon. It's going to pop out the other side, and all the credit providers or unscrupulous credit providers are going to do is they're going to increase the costs of their credit life insurance. And I think it's probably a good time to say that this is not all credit providers. For example, the big four banks, their credit life insurance is probably below the caps, or certainly proposed caps. It's below that amount, so they're not really going to be affected by this. It's more the unscrupulous credit providers who are solely lending unsecured debt or furniture retailers that are really going to be impacted by this.
Ian, before we wrap up the show, let's get your key takeaway points for consumers to bear in mind when dealing with credit life insurance. What do they need to remember?
Unfortunately, at the more sort of riskier end of consumers, or perceived riskier end of consumers by credit providers, consumers are generally pretty financially unsavvy, and they don't look closely enough at those loan agreements. So they need to look at those loan agreements, they need to look at what the interest rates are being charged, they need to look at the monthly fees, and they need to look at the credit life insurance. And remember, they can always get a quote and then go to another credit provider and get another quote. Unfortunately, too many consumers just look at the loan repayment amount. So if it's $500 or $600, they'll take the $500 a month loan repayment amount, regardless of what the interest rate is between two personal loans. So they have to be educated to look at the details. Second thing they have to look at is they have to understand what they're signing. They have to get the financial consultants who are providing that loan to explain to them exactly what credit life insurance is and where and when they can claim that credit life insurance. Because unfortunately, one of the big problems of this, as you alluded to earlier, is consumers just don't know what they're signing, they don't understand credit life, and they don't understand that they have this protection in place and they're paying for it. So too few consumers are actually claiming for that insurance.
Some sound words of advice there. Well, that's where we have to leave it for personal finance this evening. A big thank you once more to Debtbusters Debt Management Company CEO Ian Wason for joining us. Remember that we want to hear from you, so get in touch. You can send any of your tweets or comments to @CNBC Africa using the hashtag Finance410, or to myself @Gugulethu on Twitter. Until next time, take care everyone.